Right. Okay, so hi everyone. A very warm welcome for today's session. I am CA Sanchit Agarwal, founder of FinTech, where we have planned, a series of webinars to help recently qualified chartered accountants getting into corporate world. So today's session is basically on FP&A, that is financial planning and analysis as a career. And this is our first session, and I would like to thank CA Asif Masani for accepting our invitation and coming over for the webinar. So without any delay, handing over it to Ankit, my colleague, who will introduce you all with our speaker for today. Over to you, Ankit.
Yeah. Thank you, Sanjay. Am I audible?
Yeah.
Yeah. So basically, first off, good evening, everyone. First of all, I would like to congratulate our newly qualified chartered accountant who have qualified in this July 21 attempt. Congratulations to you all. Now, coming back to our speaker for today. Our speaker for today is C. Asif Masani. He is a well-known person in the finance industry. He is the FP&A lead for India and APAC in the Coursera, and he has 7+ experience in FP&A across banking, pharma, and edutech industry. Also, he has overall 10+ years of experience after qualifying chartered accountancy. Earlier, he has worked with EY and Citibank. So we have quite a learned professional with us today, and let's use his knowledge to our full potential. Yeah, over to you, Asif.
Thank you, Ankit. Thank you for that wonderful introduction. Before I start talking about FP&A, I'd like to talk a bit more about myself, how I got into this role. So it was not my screen, and is my screen visible to everybody?
Yeah, it's visible, Asif.
Yes, Asif.
All right. So I did not start in this role from the beginning. So when I completed my CA, I was doing my internship and audit with EY. And once I completed my CA in November 2012, I thought about exploring more options in the finance domain. And I was exploring a couple of options like investment banking, FP&A, and valuation. What I did was I left EY in December 2013, and it took me about 2 to 3 months to find a new role, which was my role, FP&A role at Citibank. I joined Citibank in 2014, where I worked there as an analyst. When I left Citi in 2019, I was an FP&A manager. After Citi, I worked with a couple of, I worked with Pfizer as an FP&A consultant for some time. And then very recently, in the last 2 years, I have worked as FP&A lead for two of the growing edtech companies, Great Learning and Coursera. All right. So before I start, I'd like to again share why am I doing this webinar. So I started writing about FP&A on LinkedIn about 3 or 4 months back, and reading those articles and posts, a lot of people started reaching out to me in terms of asking for help on how to appear for FP&A interviews, or how to transition from a role in audit or tax or accounts into FP&A. So I did that one-on-one over Zoom calls initially, but then I thought that doing a webinar is much more efficient to reach out to more people in less time. So that's the reason I started doing FP&A webinar. And today what I will be talking about is, so we will start with what is FP&A and what do FP&A teams do. Then we will move on to the 3 core functions of FP&A, which is budgeting, forecasting, and management reporting. And then finally, we'll talk about some key FP&A skills, some commonly asked questions that come to me from my LinkedIn connections, and also we'll go through some of the interview questions that are frequently asked in FP&A.
But there is a lot of background noise is coming. I don't know from where. Can everybody goes on to mute if
Can Sanchit or Ankit, can you mute everybody else and see if that is working?
Yes, you can proceed, Asif.
All right. So here is a poll that we ran just now. What are your expectations from this webinar? Okay, so 37% of people are saying that I am here to explore various career options and just wanted to see what is FP&A. About 22% of people are saying that I am seeking guidance on how to deal with FP&A interviews. About 1/4 of the people are telling that I am already working in FP&A but I just wanted to learn more about FP&A. And about 10 or 11% of people are saying that I am facing challenges getting an interview call for FP&A. Okay, so if you are in any of those, if you are in any of those, if you've selected any of those options, then you are in the right place. So we'll talk about FP&A as a career option. We'll talk about how to appear for FP&A interviews. Also, we'll talk about if you're facing challenges in migrating into an FP&A role, what you should be doing. So if you have selected any of the 4 options, then you are in the right place. I would be curious to know what there is one person who selected other. So if that person wants, he can put it in the chat. What that person actually is looking for, and maybe we can cover that as well. All right. So I am not. I will not be continuously monitoring the chat, but I'll look at it once in a while. So if you have any questions, you can put it in the chat, and once in like every 10 or 15 minutes, I'll take a look at the chat and I'll pause and I'll take the questions. There are some rules that we need to follow for the webinar. One rule is that everybody should be on mute. So Sanchit will make sure that everybody is on mute. And if there are any questions, you can put it in the chat window. And only if I or Sanchit or Ankit ask you to unmute and ask the question, you can go ahead and do so. Second is that in the next 40 to 45 minutes, I will give my 100% to share whatever I know about FP&A, so that it's easier for you to make a decision if FP&A is the right profile for you. At the same time, what I would expect is you should pay complete attention and focus to the material that I am sharing, so that whatever time you've invested in this webinar, you get maximum value of out of that time. All right. So just drop me a yes if you are okay with it, and if we should start with the webinar. Just drop in a yes. All right, Rahul, Shubhashish, Bhavna, Love, Somesh, Deepak, awesome, Ganesh. So let me start. Before I start, what I wanted to check with this group of 50 odd people or 40 odd people is what do you understand by FP&A? So I wanted some responses. Maybe 3 or 4 people can respond on why do you think that a company needs a separate FP&A department? Isn't the accounting department sufficient, or why would a company invest in having a separate FP&A department? So maybe you could drop the answer in the chat in 1 or 2 lines. Okay, so that is from the slide. Somesh, awesome. Bridges the gap between CFO and all the business departments. Okay, all right. So let me talk about it then. So what FP&A teams basically do is they help the CFO, CEO, and the other senior management to make decisions. And how they do that? They do that by collecting information from various departments in the organization, by organizing that information at one place, by analyzing that information and presenting that information to senior management in a way that is easier that makes it easier for them to then make those business decisions. So that is the basic role of FP&A, to help the senior management make effective business decisions. And how they do that is basically by helping the company in the budgeting process, in forecasting the financials of the company, and then doing a lot of internal management report to the senior management, which helps them make decisions. So what they do in the budgeting part is that they work with the different departments of the company and collect the inputs that are required for preparing the budget. Once those inputs are collected, they consolidate them, they review those inputs, and then present the final budget to the CFO and CEO. Similarly, in forecasting, what they do is they work on various financial models that are used to forecast the financials of the company. And basically the job is to create those financial models and update those financial models and use those models to then forecast the financials of the company. And finally, reporting is they prepare a lot of management reports which are used internally by various senior people in the company, which helps them those reports help them take business decisions. All right, I see some more responses in the chat. FP&A predict and judge the future to meet the desired target and analyze the reasons and effect. Yeah, those are all correct. To meet the budget and forecast. Yeah, absolutely. All right, so let me move on to the next slide, which shows how generally the FP&A teams are structured in an organization. So typically in a big organization where there are more than 5,000 people or which has a turnover of more than 2,000 crores, there are 3 layers of FP&A. So the first layer is the business finance FP&A, which directly work with the departments and the business units in preparing the budget and the forecast for those specific departments or specific business units. Above that business FP&A, there is another layer of FP&A team, which is called as the regional FP&A team. What the regional FP&A team does is they work with all the business FP&A teams within their region, and then they consolidate all the budget and all the forecast from them, and then they present the budget and forecast at the regional level. And finally, there is at the top there is a corporate FP&A team which works with all the regional teams, and they consolidate all the regional P&Ls and all the regional budgets, and then they present the complete view of the company to the CFO and CEO. So typically what happens is 80% of the, so if there are like 100 people in FP&A in one company, 80% of them are in business FP&A, about 10 to 15% are in regional FP&A, and about 5% of those people are in corporate FP&A. This is an example of how those teams are structured. So at the top you see there is corporate FP&A. There's an example of a regional FP&A team here which is looking at the Asia region, and in Asia you will have the different countries having specific businesses. Like for example, Titan has 3 businesses: watches, eyewear and jewelry. So there will be a business FP&A in each of the unit, which will then report to the regional FP&A, and all the regional FP&A then will go on to report to the corporate FP&A. Okay, let me look at the chat. So does the team get a holistic view of the entire organization business? So the business FP&A, which I talked about on the previous slide, the business FP&A team will get the holistic view of that particular business. So if you are working as a business FP&A for watches for India FP&A, you will get a very detailed understanding of the watches business in India. But if you are working at the Asia regional FP&A, you will get a holistic view of all the businesses that are in India and other countries as well. So one common question that I get asked is which FP&A team is better, regional or corporate or business? So I would say that both or all 3 teams are equally good. What the difference, you should understand what is the difference between the 3 teams. So in the business teams, you are more closely connected to the business and you are actively involved in the budgeting and the forecasting process. Compared to in a regional team, you are not actively involved in the process, but you are in fact driving the budgeting and forecasting the process. So you are setting the timetables, you are directing the business FP&A team, how should they go about for the budget and forecast. But in the regional and the corporate, they actually do not prepare the budget and forecast. What they do is they consolidate the budget and forecast for the regions or the total company level. CA freshers are hired generally in which team? So CA freshers are generally hired in the business finance team, which is this one, the 80% population. And once they get some experience in business finance, then they can move into the regional and the corporate FP&A team. So usually people in the corporate or the regional FP&A team have some experience of doing budgets and forecasts. But yeah, that is what happens generally, but there might be an exception here and there. I mean, it's not a rule that they cannot hire freshers in corporate FP&A, but generally they hire people in business finance and then they can move into the regional and corporate FP&A. All right, let me move on to budgeting then. Are there any more questions that I can take up at this point? I'm just going through the chat to see if there are any questions that I missed. Doesn't seem like. Okay, so which companies we should look for in order to have a successful FP&A career? So what my suggestion is, look for companies where the business is in India, or you are working for the same business as the physical presence is. So by what I mean is, there are some roles which are outsourced, like you are in those roles you're looking at the business of some other country sitting from India, which is more of a outsourced role. What happens in that case is you're not directly connected to the business, so you are connected to your onshore team, and then the onshore team then makes all the presentations, and they are the people who are the front face of FP&A in that case. So I mean, if you have a choice, you should always look for a company where the business is in India, or if you are working for some other business, like if you are working for a multinational company and you are looking at a business of some other country, you should make sure that you are in the front end of the FP&A and not in the outsourced end. And in terms of which companies, I mean, you could FP&A department is present in almost every company which has a turnover of more than like 500 crore, or which has more than 1,000 people. So you have a wide variety of choice in terms of I mean, choosing which industry or which company you so whatever industry you have a preference in terms of your interest, you should then study that industry. And in that industry, for example, if you have a keen interest in banking, you should study the banking industry very well and then apply for all the banking FP&A interviews. All right, let me move on to the next part, which is budgeting. So before I move on to it, I wanted to check if anybody in the group can answer why do companies need budget. So you can just drop in one word or one line in the chat. So just for me to check what is the current understanding of budgeting in this group. Cost control. Shreyas says evaluation and motivation tool. Sanchit says cost control. Bhuvneshwari says managing the financial needs. Okay. Manish says to have a look at the future of the company. Okay. All right. Mickey says estimation. Yeah, correct. Sahil says comparing actuals with the expected. Okay. Ankit says further process after forecasting to manage unexpected challenges, to know where we are spending as planned or not. Correct. To quantify the target and to set parameters to achieve it. Perfect, Ajay. That is the answer I was looking for. To utilize fund optimally. Yeah, that is also correct. Beyond budgeting is used nowadays, Gaurav. Yeah, that is what's happening. That is the change that is happening in the FP&A right now. Planning for the next financial year, Ananya. Okay, all right. Let me just move on and talk about it then. So what budget is it's actually a blueprint or a roadmap for how a company is expected to do business in the next financial year. There are two types of budgets. So one is your strategic budget, which is having a time horizon of about 3 to 5 years, and then there is your annual budget, which is for the next financial year. Why having budget is important is because without a budget there wouldn't be any yardstick for you to compare to your actual performance. So for example, if you have a revenue of 100 crores this year, how would you be able to say that if you have performed well or not, right? So if you had budgeted for 120 crores and if you achieved 100 crores, that means you have not performed well, right? So there has to be some yardstick for you to be able to measure your performance. Also, as someone mentioned in the chat, that budget helps in decision making and identifying problems earlier. So when you go through the entire budgeting process that we'll come to in one of the next few slides, when you go through that process, you are in a position to identify a lot of business problems which you can then solve for in advance, rather than once the problem is occurring and then you go and solve it. Then that is a very, very costly affair. And it is a fact, and research shows that the companies that budget that prepare a budget, they achieve more compared to the companies that don't prepare a budget. So those are the few reasons that why a company budgets or prepares a budget. Perfect, Naresh. Yeah, budget is a plan of how the company wants to go ahead. let me move on to some of the commonly used budgeting methods. So these are the budgeting methods which are most commonly used across industries. So there are more methods of budgeting, but then these are the ones which are the most commonly used. Okay, so the first one is top down or bottoms up budgeting. So what happens in top down budgeting is that the top management or the CEO gives the company a target without even considering or without even consulting the department heads or middle level managers, and those targets are usually non-negotiable. So whatever the CEO says, the company or the managers have to follow that target. So that approach is called as the top down approach, which is like one person or few people at the top deciding on what the company should do in the next year, versus the bottoms up budget, which is more of a participative budget where the departments or the managers actually prepare their department budgets, and then all those budgets are consolidated by the FP&A teams, and then that budget is adopted by the CFO. Incremental versus zero-based budgeting. So what happens in incremental budgeting is that you consider the previous year's performance as a base, and then you add some percentage to it. So for example, if I want to budget the revenue for next year, I would see the last year's revenue. Say for example, it was 100 crore. And I think that this year we can grow 20%. So then the incremental budget for this year revenue will be 120. So that is how incremental budgeting works, compared to zero-based budgeting, where you do not consider your previous history, or even if the company is existing for the last 5 years or 10 years, you do not look at the past performance, and you start and you budget each and every line item from scratch. So in terms of the time and the effort, the zero-based budgeting is much more detailed and much more time intensive compared to what incremental budgeting. Then we move on to traditional versus the rolling forecast. So what happens in traditional budgeting is you budget for the next 12 months before the year starts. So if you are budgeting for April to March next year, you would generally do that in January or February before that financial year begins. Versus in a rolling forecast, you don't do a 12-month budget. You at every point of time have a 12-month rolling forecast in place, so that you don't have to budget again and again every year, and every time a month is completed, you then just replace that month with the actuals, and then you add a forecast for another month at the end. Let me move on to the example, so that will give you more clarity on how these approaches work. Okay, so this is an example of hotel industry. So in a hotel industry, if you wanted to do top down budgeting, what you would do, it's on the right hand side of the slide. So you would value the total hotel market in the place that your hotel is situated. So for example, I have a hotel in Lonavala, and the entire market of Lonavala is 500 crores annually, and my share in that industry is 5%. So then I will calculate my revenues as 500 crores into 5%, which is 50 crores. So that is how you do top down budgeting. You look at the entire, you look at the macro picture, and then you decide what target you need to follow, compared to a bottom up budgeting where you will look at the number of rooms, the average occupancy rate, and the average revenue per room. So how would you budget in the bottoms up way is you would multiply the number of rooms by the average occupancy and average room rent per room. Alright, let me move on to the incremental budgeting versus zero-based budgeting example. Again, carrying on the same example, in case of an incremental budgeting, so if your previous year revenue was 100 crore and you grew 15% in the last year, and the expected growth for next year based on the macroeconomic indicators is that the GDP is growing at 20%, or the industry is growing at 20%, you expect a 20% growth. So then you will calculate the revenue as 100 into 1.2, which your revenue by the incremental way would be 120 crores. Versus in the zero-based budgeting, what you will do is you will not consider your previous year revenue. You will assume, you will make fresh assumptions for the average occupancy. You will make fresh assumptions for the average room tariff, and then you will then build up that budget from scratch. In terms of the rolling forecast, so this is how the rolling forecast looks. So this is an example of a 5 quarter rolling forecast. So in the first quarter, you see that all the blue boxes are forecast, and in the second review, when 1 quarter is over, you replace 1 quarter of actuals, and then you add another forecast period for the second year of the second quarter of the second year. Similarly, when another quarter is ending, you add the actuals of that quarter, and then you add another forecast quarter at the end. Compared to a traditional budget where you budget for 4 quarters every year at the beginning or before the year begins. Alright, so let me stop here and check if there are any questions on the understanding basis, what is the top-down budget versus bottom-up, or what is incremental versus zero-based, what is a traditional budget, or what is a rolling forecast. Are there any questions, or is it clear? Let me look at the chat.
So if it's clear, just write yeah.
Okay, Naresh says all clear. Ganesh says clear, thank you. Okay, all right. There is a question from Neha. How do we know which budget is to be used? That's a very good question. So that depends on a lot of factors. So that depends on industry and your company. That depends on how much time you have for budgeting. So if the industry is very stable, like there is a stable growth year on year, usually what they follow is incremental budgeting. But if a company is very fast growing, or it's not very stable, then they prefer zero-based budgeting, because the base that they used to do the budget, they are not comfortable using that base for doing budgeting. Personally, I have worked in the companies where we have done both top-down budgeting as well as bottom-up budgeting. So what generally happens in a company is that when the budget cycle starts, the management or the CEO, CFO, they give a top-down target. Say for example, last year revenue was 100 crore. So CEO and CFO will tell you, okay, so this year we need to do 125 crores. So there is a top-down target coming from the CEO and CFO in the beginning of the budgeting process. But after that guidance comes, there is also a bottoms-up process that happens. So after doing that bottoms-up process, the result might be we can only do 110 crores. So the CEO is saying that you need to do 125 crores, but the managers who actually will do the sales and marketing, they are saying that we can only do 110 crores. So generally middle ground is adopted. So they negotiate between themselves and then say adopt 115 crore as a target for next year. So that is what generally happens in companies. In terms of traditional versus rolling forecast, at this point a lot of companies are following traditional budgeting, but because the traditional budgeting involves a lot of time and it involves a lot of resources, slowly and steadily a lot of companies are moving into the rolling forecast. Okay, let me check if there are more questions. Shreya, how do we decide when to, okay, we covered that question. Vikrant, which type of budget give preference in interview, especially as experience? So Vikrant, can you just clarify that? What do you mean by EXP? Which type of budget give preference in interview as?
So he's asking that he's a fresher and he doesn't know about any. I mean, he just knows the definition. So which one should he prepare for interview, as he has no experience, no prior experience?
Okay, so if this is an interview question, so for example, if you are asked specifically for a budgeting method, say if you are asked what is a zero-based budgeting or what is an incremental budgeting, you can obviously talk about that specific method. But if you are just asked what all budgeting methods you know, I think you should talk about all of them. That will give the interviewer sense that you know many things and not just one budgeting method. So if I was asked in the interview, I would talk about all 3 or all 6 of them and explain what is the difference between top down and bottoms up what is the difference between incremental and zero base, and what is the difference between traditional and a rolling forecast. So it will be like a 5 to 8 minute answer that I'll prepare, and I'll talk about all of these methods. All right, let me move on to the next question then. Which budgeting method is used in the banking industry? Okay, so in banking industry, it's top down and bottoms up and incremental. So you have a top down budget that that is given by the CEO and the board of directors. Then there is a bottoms up process that happens during the planning season, and usually they do it incremental because the banking business is generally stable, and unless it's a new bank which has started like 1 or 2 years back, if it's a bank which has been in existence for more than 10-15 years, they usually follow the incremental budgeting. Zero based budgeting is followed mostly in new companies which do not have a stable base to use for budgeting, and also a lot of manufacturing companies do zero based budgeting because they are always looking to cut cost, and by the zero based budgeting you question each and every assumption and you question each and every line item of the budget. So that way they are finding ways to do cost cutting by using the zero based budgeting. So even if they are having a stable business, a lot of manufacturing companies follow zero based budgeting. Okay, all right, let me move on then. So let's come to the actual budgeting process. This is what is the thing that most FP&A people are valued for. So if you are an experienced FP&A professional, like if you have 5+ years of experience, the question that you will get in the interview process is how many budgeting cycles have you been a part of? So a budgeting cycle is the entire process from start to end, which happens during couple of months before the financial year. So for example, if January to December is the financial year, that process happens in September and October in the previous year. It's usually a 6 to 12 week process, and it involves both the top down and the bottom up process. So how does it work? So in the first step, what happens is the FP&A teams clarify to all the business departments and all the teams that are working in the company on what can be expected from the budgeting process. So they give them a detailed timetable showing the key deliverables, what are the timelines, what are the expectations from top management. Here you get the top down targets also from the top management. So in this stage, a lot of clarity is given to everybody who is responsible for preparing their department budgets on the timelines and on the process, what process they should be followed. We also share the templates that will be used for collecting the inputs from the various departments at this stage. Once that is done, in the second stage, what happens is we understand what has happened in the past 3 or 4 years. So we take the history, we take the historical information for the past, at least for the past 3 years, and see what are the trends that are emerging. We check for seasonality. By seasonality, what I mean is, are the revenues occurring in straight line, or are there fluctuations in some months compared to other months? We also check check our previous budgets, what mistakes we have done in the previous budgets, and then we move on to the third step, where we try and forecast the future revenues and expenses. So in this stage, while we are doing or forecasting the revenues for the next year, what we do is we ask ourselves a question. The question is that what will these factors by these factors I mean, how will the economic environment, how will the technological changes, how will the competitor actions, and how will the external factors or internal factors impact our revenues and expenses in the next year. So for example, I'll talk about an example where there is a technological change. So if our company is using a technology which is expected to obsolete in the next year, then obviously we will incorporate in our budget the expense for upgrading our technology or buying the new technology. If there is a competitor who has emerged in this year, and that competitor is expected to take a lot of business from us in the next year, we'll obviously plan for some strategy in terms of our pricing, in terms of our product or services to tackle that competition. So at this stage, a lot of thinking is done in terms of what can we do for the next year in terms of how our revenues and expenses will look like. Once that is done, in the fourth step, once you have the historical performance, once you have predicted the future trends, then what you do is you convert the company goals that was given to by the top management in the step 1 into financial targets. So I'll take an example here. So if the CEO wants the company to increase the net profit by 20% or sales by 20, let me take a simpler example. So if the CEO wants the company to increase their sales by 20%, so what different departments will do is, in order to achieve that 20% increment, what they need to do. So for example, I'll take the same example that we took earlier. So if there is a company with 3 businesses, for example, Titan, it has a jewelry business, it has a watch business, and it has a eyeglass business. So if the CEO says, okay, next year we want to go from 100 to 150 crores in revenue, so these departments have to internally decide, okay, which department should grow more, which department can handle a share of that growth. So what these departments do, that they will come with specific targets for their individual departments. Now once those targets are set, so for example, to get to 150, what they decide is, okay, last year jitna kiya hai, that is fine, but out of the 150, the watch department needs to get 10 crore, the eyeglass department need to get 20 crore, and the balance 20 crore should be coming from the jewelry department. This is what has been finalized. Once that is finalized, in the next step, which is the 5th step, those departments which are the business units, they prepare detailed action plans on how, for example, how the jewelry department will achieve 20 crore more than what it had achieved in the last year, so that they meet the company goals. They prepare tactical plans and action plans at this stage. Once this is done, they again go back and they project their costs and revenues. So in order to achieve that growth, what incremental investment they will need to make, new people that they will need to hire. So basis that, they will prepare their department budget projections. And in the final stage, all the department budgets will be consolidated by the FP&A teams, and it will be presented to the CFO and the CEO. An interview question that you can get on this is, tell me about that. So if you have some experience in FP&A, like 1 or 2 years experience, a question that can come from the interviewer is that, tell me about a time when you were involved in the budgeting process. Or if you haven't yet already, if you are a fresher, then a question can be framed like this: how would you go about preparing the budget of a company? So if you get this question, then you should talk about these 7 points. Any question on this, or should we move on? Just type in a yes if you are clear, or if there are any questions, you can drop in a question in the chat box. All right, so I don't see any questions. I see a few yeses from Bhavna, Subhashish, Manish. All right, so let me move on then. So we talked about budgeting. Now let me talk about forecasting. So what is a forecast? Forecast is an estimate of what the company will actually achieve if it keeps performing as it is. So say for example, you have prepared the budget for the next for this year in the last year, but you are in the second quarter or the third quarter of the current year. Obviously things will not have gone as per the budget everywhere. So most of the things might have gone your way, but there might be some things that might have not gone as budgeted or as you had expected. So what the forecast does is, it gives you the realistic picture of where your revenues or where your expenses will actually end in that financial year. A common question that gets asked in on this is, this is the number one question that is asked in FP&A interviews, especially for people who are freshers or who have like 1 or 2 years of experience. What is the difference between a budget and a forecast? So what you can say is that a budget is a plan for where the business wants to go, while the forecast is an estimate of what the company will actually achieve if it keeps performing as it is. So to demonstrate this, I usually take an example of cricket. So how many of you follow cricket here? Just if I can check in the chat box, how many of you here understand cricket or follow IPL? So I can use this example. Then just type in a C if you understand what if you follow cricket or if you understand cricket. All right, awesome. So let us assume that today we have a match between Mumbai Indians and KKR at night, and before the match begins, before the toss is done, what Mumbai Indians captain tells the team that I have looked at the pitch, I have looked at the conditions, and we should achieve at least 200 on this pitch if you want to win against Kolkata Knight Riders. So deciding what you want to achieve before the year even begins, that is the budget. So 200 year is your target or your budget. But after when the toss happens and when Mumbai Indians come to bat, at that time what will happen is they might lose an early wicket, or the conditions might not be as they might have expected. So after say 10 overs, they are only 50 runs and they are like 3 wickets down. The forecast for them will obviously be not 200. They'll try to achieve at least 140 or 150 so that they have something decent on the board to defend. So that's the difference between the budget and the forecast. On the contrary, it could happen that they get to a very good start. They are like 100 in the first 6 overs without losing any wicket. So then they could then revise their budget and their forecast could be even more than 200. So that's what happens in companies. They set a target initially for their revenues and expenses, and as they go on performing during the year, they then keep revising based on the actual environment and actual assumption. I mean, whatever the assumptions, if they had made, if they turned out to be incorrect, then they update those assumptions and then they update the forecast. All right, so did everybody understand what is the difference between the budget and forecast? So I have a question. Can we change the forecast, but can we change the budget as well? Okay, so the forecast, obviously it is changed every period. So if you are doing quarterly forecast, you will change the forecast every quarter. If you're doing monthly forecast, you will change the forecast every month. So that obviously will change every month. Budget generally doesn't change. So if you have prepared the budget for the next year, it will not change except there is like a very exceptional situation. For example, during the COVID, we had prepared a COVID budget. So that was an exceptional situation. But in most cases, budget doesn't change. All right, so let me move on. All right, awesome. So what things you should keep in mind while forecasting? So while you're forecasting, you take the budget as the base, and then you change your numbers as per the changes that you see in the actuals in the previous period or the previous month or the previous quarter. So what you look at is trends. You look at things like seasonality. You look at one-timers, and you look at what is the pipeline in there for the next 2 or 3 months. So let me take an example. So if you are doing a sales forecast for the next quarter, you look at the trends, what has happened in the previous 2 quarters. You'll look at one-timers that had happened in the previous quarter, but that might not happen in this quarter. You will review the sales pipeline that is available with your salespeople, which shows the probability of contracts getting executed in the next quarter. So you will use all this data. You will look at the budget that was set earlier, and then you will look at what has changed from the budget, and based on that you will then forecast your updated. You will create your updated forecast. These are the forecasting techniques. Some of the forecasting techniques that are generally used. So these are not like must to know for freshers, but I still talk about them because some people do use these techniques. So there's a technique called moving averages, where you take like the moving average of the last. So if there is no seasonality or no trend that you see in the data, you just take a moving average of the previous 3 months or previous 12 months. A simple linear regression is where you know that one variable is dependent on another variable. So an example would be your sales in some companies is directly proportional to your marketing costs. So in that case, you will run a regression using the marketing data which you have for the previous months and quarters, and you will use the set of your sales and marketing data to come up with a forecast using a simple regression model. In case of multiple regression, there are more than one variables involved. So you compare more than one independent variable with one dependent variable. So independent variables are multiple, but you have one dependent variable. So for example, your sales might be dependent on not just marketing, but also on marketing and the engineering team. So then you have two variables involved. So you will take the data for both the variables for the past, and then you will come up with a multiple regression model. Okay, I have a question on the chat. What is a pipeline review? So what happens in most companies is that in the sales team, they have a defined pipeline. What by pipeline, what I mean is they have a sense, the salespeople, they usually have a sense what will happen in the next quarter. So for example, if they are working on some deals right now, they will expect at least some of those deals to convert to sales or revenue in the next quarter. So for example, if the salespeople are working on 10 different deals right now, and out of those 10 deals, they will tell you that okay, out of those 10 deals, 3 deals will be signed 100%. I mean, it's in their bag and they just need to do the formality. So for the next quarter, you will take 100% revenue for those 3 deals. For another 3 deals, they'll tell you, okay, this is not 100% in our bag, but this is like 80% in. I mean, this is 80%. We think that we'll get this client. So you will take that number and you will apply a 80% probability to that, and the balance they might say this is like, I mean, less than 25% probability. So you might not consider that in your revenue. Is pipeline review something we are expecting to cover as a business, new project, new work in coming future? Please correct me. So Subhashish, I did not get your question. Can you reframe it again? Is pipeline review something we are expected to cover it as a business, new project, new work in the coming future? So if you could try to reframe that question. I did not understand what exactly the question is. Or maybe Sanchit, you can unmute Subhashish and he can talk about it.
Like if pipeline is something what the business is expecting it and expecting something to convert it for the near future, like as a new project or as a new work for the team or something like that. So
Yeah. So what usually happens is the finance people or FP&A people have access to the CRM of the company, where the business people updates all this information in terms of the deal probability of converting. So we first look at the CRM system, and based on that CRM system data and conversation with the salespeople, we then forecast the sales for the current quarter based on the pipeline of the next quarter.
got it. Thank you.
Okay. What are the data management tools software used in FPNA? Okay, so in terms of data management, there are multiple tools used in FPNA. Actually, not in FPNA, but across the organization. So there are generally different tools for different things. Like for sales, people use CRM software. For accounting, we use ERP. For example, SAP. For say budgeting, there is a separate software which is Oracle, or it might be another software for some other people. So there are like 5 or 6 softwares. For headcount tracking, there is a different software called HR Soft, or some HR tracking software, or some payroll software. So there are like 5 or 6 different tools that the company uses, and those are usually integrated. I mean, these days especially, they are integrated, and then you have to look at the separate tool, as well as how you should understand how data flows from each of those tools into your budgeting software. Okay, all right, hope that answers that question, Ashish. Let me move on. Okay, so now let's come to the we talked about budgeting, we talked about forecasting. Let's talk about management reporting and variance analysis. So these are some of the common reports that I have at least used in the last 5 or 6 years. So I'll not talk about each of the report. They are pretty much self-explanatory. I'll just pause here for 30 seconds or 1 minute, and if you don't understand, most of them are pretty self-explanatory. If you don't understand any of it, just type it in the chat window and I'll expand on it. So while you do that, let me just talk about the most common ones that we use every month and every quarter. So month-end reporting is something that we do every month. So whenever the accounting or the controller team closes the book, what we do is we do a variance analysis for the previous month actuals versus plan and versus budget. Versus budget and versus forecast. And we try to find out reasons why we did not meet the budget or why we are different from what we forecasted. So that is what happens in month-end reporting. The second most commonly used is a quarterly business review. So just like month-end, there is a quarter-end review, but this time there is more focus on more focus is on planning for the next quarter rather than talking about the variances that happened. So we do the review of the past quarter year and then we talk about the forecast for the next quarter in this meeting. Your budget and the operating plan deck is, once you complete your budget, you present that budget to the CFO. That deck is called the budget or the operating plan deck. Okay, so I see in the chat box balance scorecard. Okay, so balance scorecard is reporting. It's a reporting methodology where you don't just look at the financial numbers. You look at a holistic view you look at the holistic view of the business. So you have 3 or 4 criteria in that scorecard. So one is obviously your financial, second is your people, and then third can be your processes. So you don't just look at if you've achieved your financial targets, but you also look at if you have achieved your people target. By people targets, what I mean is training, development, hiring, those sort of things, and also the processes. So have you made any progress on improving the internal process for the company? If there are any gaps in your internal controls, have you tried to fix them or not? So those are the things that are looked in the balance scorecard. So it's not just the financial performance, but you also look at the people and the processes. All right, so let me look for. All right, so Sanchit, okay, that was a YouTube link. Vandana is asking what is a flash report. Okay, so flash report is something which is more frequent than the month-end report. So if there is a very crucial number, for example, the revenue number, which is very important for the senior management, they may not want to wait for the month-end report to look at the revenue number. They may want to look at the revenue number every week or even sometimes every day. So flash report is something that is more frequent than a month-end report. Mostly it is weekly, but also sometimes it is daily. So every day, if the CEO wants to know what's the revenue every day, you send him a flash report. Okay, this is the revenue that we did today. All right, let me just talk about a couple of more reports and then we'll move on. And if you want me to expand on any of the other ones, you can drop a comment in the chat and I'll do that. Ad hoc reporting is something we do. So this is not by the name, it's not a report that we send or that we prepare every week or every month or every quarter. So generally a question comes up from the senior management, and when that comes up, we just don't go with the answer. We go with the answer along with the supporting that supports our answer. So say for example, the senior management or somebody in the leadership team asks you, why has that particular expense gone up in this particular quarter? So you will not just give the reasons on the email. You will attach a presentation or a 2-slide. You will attach a deck or a 2-slide presentation showing the basis of your findings. So that is what an ad hoc report is. So it's an ad hoc thing that's not planned in advance. It can come that might come at any point of time whenever there are questions. What is the difference between FP&A and a business finance role? Okay, so by business FP&A in the previous slide, I did not mean business finance role. So it's a business FP&A, and business finance is slightly different. So what business finance people do is they are like they are not involved in the FP&A activities like budgeting and forecasting. What they do is they basically are the finance people for that department. So if you are a sales business finance person, then you are a finance person for that sales department or the sales team. So if there are any questions on numbers, or if there are any things related to I mean, if while they are doing the sales, if they need any support in terms of the contracts or in terms of finalizing the sales, or if they have any questions related to what if we sign this deal, how will this impact on our P&L, if we have to negotiate with this client, till what level can we go. So those are the questions that are taken care by the business financing. So basically they are people who are working in the sales department, but as finance people for sales finance people. I mean, I'm talking about a sales finance person. And similarly, you can have a marketing finance person, you could have a HR finance person, and you could have a production or a manufacturing finance person. Okay, so business finance is different from business finance FP&A. So glad you brought that up, so I could clarify that. Business FP&A is in larger companies. It's the FP&A team which works with a specific business for preparing the budgets and the forecast, while business finance is actually a person in that department who answers all the finance related questions for that business or for that function. Okay, so let me get back to this slide. Are there any more questions on this, or if not, then I'll move on. All right, I don't see any more questions, so let me move on. I'll not talk a lot about this variance analysis. So this is something that we already talked about in the month-end reporting. What we do is every month we see what has happened versus what was budgeted and what was forecasted, and then we try to give reasons for that. What are the two major reasons is your sales volume and your price variance in your revenues, and the cost variance. So you've already studied this in detail in your CA finals, so I'll not spend a lot of time on this. Okay, now let me come to the more important part, which is what are the skills that are required for FP&A. So in my experience of last 7 years, these are the key skills that are required in FP&A. So I'll talk about them one by one, and you can simultaneously drop in your questions if you don't understand anything. Okay, so on the very left hand side column, these are the basic skills that they expect even from freshers while they apply for FP&A roles. So business acumen is something which is the business knowledge, or they expect the candidate to understand their company's business and industry. So my suggestion would be, if you're applying for an FP&A role, do a thorough research of that industry and that company. Even if it's not a listed company, you can go to websites you can go to the MCA website and get the financial of that private company, and then study that financial before you go for that interview. So that is like the number one thing that they look for is, does this person understand our industry and understand our business? Other things are attention to detail as well as understanding the big picture. So attention to detail as in your reports that you prepare in on your day-to-day basis, or the forecast that you prepare, they should be accurate, but also, I mean, they should obviously be accurate, but also you should understand the bigger picture while you're creating the forecast. So you should not be spending a lot of your time in things that doesn't result into a lot of results. So you should be in a position to balance between paying attention to detail as well as understanding the big picture. Accountability and ownership, that's given, I mean, that's expected of every role. Effective questioning skills. So when you talk to the various business people or the various other departments, you will need to effectively question them on a lot of things, like challenging the assumptions that they have made on the budget they have prepared, or that the inputs that they have submitted, asking them for reasons for variances while you are doing the month end or the quarter end report. So you will need to be good at asking questions to people in the other departments as well. Then we move on to some of the core skills that are required from people who are like 1 year or 2 year into FP&A. So these are like converting data into insight. So this is probably you should know how to use your charts and softwares like Tableau, Power BI these days to be able to convert your data into visual charts. Financial modeling is something that they'll not expect out of freshers, but they'll expect you to get better at it as you join and you spend a year or two with the company. Advanced Excel is the most important thing, I would say. So you should know your Excel very well. At least I would expect a lot of questions on Excel if the interview is for a fresher or for somebody who's like 1 or 2 years experience in FP&A. In fact, nowadays what companies do is they give you an assignment. They give you a case study which involves the use of Excel, and they ask you to submit it. I mean, they'll ask you to submit it within a day or two. So once you go through the interview, they'll give you a case study and they'll ask you to submit it in a day or two, so that they understand how you are doing, how are your Excel skills. Technology savvy is important because, as I mentioned earlier, you will be using a lot of different tools, and as things evolve, new tools will come up. So you should be able to quickly adapt to using the new technology. Data analytics basics. This is something which is not a must, but if you have it, by data analytics, I mean things like understanding of statistics, understanding of programming language like SQL, using softwares like R, and there are other data analytics softwares as well. So this is not at all required, but if you do have interest in these things, it's definitely a plus, because there are separate data analyst teams in the company which you will have to interact with. So if you know these basics, it will be easy for you to interact with the data scientist or the data analyst in your company. And on the right hand side, these are some skills that you need to have once you complete like 3 or 4 years, or once you become a senior in FP&A, like at a manager level or higher. So you should be able to present well. You should be able to tell. You should be able to present in a way that you communicate your data as a story. You should be able to build relationships with the business people, and as well as work with other teams. So there will be a lot of projects where you will be working with cross-functional teams. So you should be able to collaborate and communicate well with other teams as well. So are there any questions on any of these skills that are required for FP&A? I see a comment in the chat box, but I don't understand it. What is Altrex? So even I am hearing that for the first time. Okay.
Made the fixed processes by building in macros, and it's a very user friendly tool. You can just drag and drop tools and input the data and get the final result.
Got it. Okay. So in terms of, I am hearing that name for the first time, but there are similar tools available which you use. For example, Excel macros is the simplest one. You can build Excel, you can build macros in your Excel file to automate your routine tasks. So that will save you a lot of time for analysis and presentation. A lot of companies have invested in RPA. So a lot of companies have RPA licenses, which I think that is one of the robotic process bots that they have, which you can learn to use and automate a lot more things outside Excel as well. Do we need to mention these skills on our CV for this role? I wouldn't mention all of these on the CV except for Excel and financial modeling, and if you know data analytics. So except these three, I wouldn't mention a lot of this on the CV. But while you're giving the interview, you should be able to talk about it in a way that you're telling a story of a past incident where you have demonstrated the skills in your past role. Or even if you are a fresher, you should try to look for past incidents in your college or in your life where you have demonstrated these skills. Even if not these skills, some other skills, but which are transferable into these skills. Hi Asif, can you suggest some extra course for FP&A profile in addition to CA? Power BI certification demanding in these profiles. Okay, so Power BI is one of the tools I would suggest you to first, so two things, right? So if you are already working for a company, you should look to use tools that are already there in the company. So if you learn Power BI, but the company that you're working for is not using Power BI, then it's of no use. Second case, where you are a fresher and you are looking for a job, so you should learn the most common tools. So Power BI is a very common tool. Tableau is another very common tool. So you can learn these two. But once you appear for interviews and you join in the company, you might find that there is a different tool they are using. So you might have to learn that tool again. But yeah, if you are a fresher, you should learn at least one of the two, Power BI or Tableau. In terms of extra certification in addition to your CA, so what I would suggest is, like, a lot of people do two certifications. For example, they do CA and CS, or they do CA and CFA. So for FP&A profile, I would suggest you do a CMA after your CA versus a CFA or a CPA or a CS, because a CMA is the management accounting role is what you're actually doing most of the time in FP&A. So you should, versus if you want to get into FP&A and if you want to make a career in FP&A, I would recommend doing a CMA versus a CS or a CFA or a what else, CPA. How can one from financial controller background switch to FP&A role? Yeah, so the best way to do that would be to try to get an internal switch. So if you have a FP&A department in your company as well, so that will be the best option I see, because you already have the industry knowledge, you already have a lot of knowledge about your company. So it will be the easiest for you to switch internally into FP&A role for your company. But if you're not getting that opportunity, if that is not possible, then what you should do is you should look for other companies in the same industry which do not have a very established FP&A department at this point, but which are looking to build a FP&A team. So in those companies, it will be easier for you to get into. Okay, I think I missed some of the questions. Sanchit, do let me know if I miss any of the questions. Just let me know.
Yeah.
How to transition from audit fresher, especially offshore, to FP&A? Okay, so this is something that is very close to me, because I was into audit before I transitioned into FP&A. So especially for freshers and people who are having less than 3 years of experience, they prefer audit background and accounting background people in FP&A, because they have the basic understanding of financial statements, and they, while auditing, they also have looked at multiple businesses, so they generally have a good sense of how businesses work. So if you are a fresher in audit, like if you have spent less than 3 or 4 years in audit, I think it is relatively easy for you to transition into FP&A, because they are looking for people from audit and accounting backgrounds in FP&A fresher roles. What I would do is what I did was I approached a local institute when I was into audit. What I did was I approached a local institute in my city. So you'll have to search for an institute which gives you a course in financial modeling, or maybe even investment banking, which talks about the budgeting, forecasting, and M&A, things like that. So if you do approach, you should find an institute which has tie-ups with companies. And so what I did was I approached an institute in my city which had tie-ups with a lot of companies where they used to source their FP&A candidates from. So I did a course from a local institute in Mumbai which had a tie-up with Citibank for hiring. So that's how I got an opportunity to interview at Citibank for the FP&A role. So that would be the easiest way. But again, there are a lot of institutes these days, so you should carefully do your research in terms of whether they have a tie-up, and you should talk to people in the companies where they have tie-ups to check if they actually do hire from those institutes. So I think that will be the best way. Somebody wants to ask a question. All right, let me take the next one. What type of interview questions can I expect for FP&A profile in banking industry as a fresher? Okay, So in terms of the specific banking industry, they will try to assess if you understand how a banking P&L is prepared, how the banking balance sheet is prepared. So you should spend time in going through the P&L and balance sheet of at least 4 or 5 banks that are the company, I mean, which are a part of your target for giving interviews. So you should go through the banking P&L, the banking balance sheet. What other things they look for is business knowledge. So you should understand the banking products and services very well. So for example, in banking you have two different businesses. One is your retail banking business, which involves your banking loans, deposits, your credit cards, and then the other side is your corporate banking business or your investment banking business, which is more of treasury and investment banking functions for which are helpful to the corporate. So you should try to understand the banking products and services and the banking financial statements. So those are the two things you should prepare for. Let me look at the question. Is FP&A only for CA professionals or for MBA finance as well? So what I have seen in my experience is they prefer both CA and MBA finance people from top colleges. So so what they usually have a criteria is that either it should be a CA or it should be an MBA from tier 1 or tier 2 college. So yes, MBA finance. So if you look at the FP&A department in companies, it's a mix of CA and MBA finance people. So it's like 70% of them would be CAs and 30% or 40% would be MBA finance people. Offshore or onshore audit matters. Yes, so offshore or onshore matters because if you are in an offshore role, the experience and the learning you will get will be very limited compared to what you will get in an onshore role, whether it be FP&A or whether it be audit. So unless you have no choice, or I mean you do not have an option, if you have an option to choose, you should always try and choose the onshore audit or an FP&A profile, just because you will directly interact with the business people and you will get to learn more. Okay, Parul, this is a very big question which is not fitting into my mobile, where I am looking at the chat. So can you just unmute and talk about it? I'm still trying to read it, but just in case, it will be helpful if you can unmute. Will it be possible to switch?
Possible for me to switch industries at a later stage, because I am not really sure as of now which particular industry I would want to go into.
Okay. So what's your total experience in that industry already?
No, I am a CA fresher.
Okay, so your question is, once you spend some time in one industry, would it be easy for you to switch industries?
Right.
Okay, so once you spend like more than 10 years, then it is difficult to switch industry. But anything less than that, say it's 3 or 4 years or 5 years, it should not be difficult to switch industries in the same profile. So for example, if you are working as an FP&A person in one industry, you should be able to switch to an FP&A profile into other industry. Obviously, you will have to do a lot more work because you will have to prepare for that interview, and to do that you will have to research that industry and that company very, very well, because that's not something that you are doing on your day-to-day basis. So it's not I mean it's difficult, but it's not impossible to switch industries. But yes, after you spend like 10 years in one industry, the chances are less. Again, I would not say it's not possible. It all depends on your networking skills and how good are you in convincing the other person in the interview. But yeah, as you spend more time in one industry, the lesser are your chances to switch into different industry. But yeah, it's not impossible. If you are really interested, if you really research the new industry well, and if you can convince the person in the industry in the interview that you have the industry knowledge that is required, you can switch later stage as well. But it's relatively difficult compared to switching in the same industry. Okay, all right. So I think it's 5:30, and I'll take a couple of I'll take last two questions. Can you please comment on opportunity of FP&A role in Signify? Philips Lighting. Rahul, I do not. I mean, this industry is not very familiar to me, so I'll not be able to comment on it without researching. So maybe what I can do is I'll share my LinkedIn profile with you guys. If you have any questions that are very specific, you can reach out to me on the LinkedIn, and I can then do some research and then answer your question. All right, how to transition from a cost allocation role into FP&A role? So not just a cost allocation role, but from any role, if you want to transition into FP&A role, we talked about the skills that are required in the FP&A role. We talked about what work we do in the FP&A role. So you should try and link your existing skills that you have in your current role to what skills are required in FP&A role. So if you have some transferable skills, for example, in that role also you use advanced Excel a lot, or if you use some tools that are used in FP&A in your company or in that industry, you should try to build a story that your skills in that role are transferable to what's required in FP&A. So that will be the best way to be able to transition. How to remain updated with amendments and changes? Okay, so this is so FP&A is not like your taxation or your accounting that has like set standards or a direct tax code that keeps on changing. So it's not very difficult to stay abreast of changes. So what I would recommend is, let me just put it in the chat. So what I would recommend, what I personally do is I follow a couple of industry websites. One is FP&A Trends. So whatever I have learned basically in the past 5 years is from this website, which is basically your CA Club, which is your FP&A for people who know CA Club and Tax Guru. So this is like the Tax Guru or the CA Club for FP&A people. And other one I would suggest is you should take a IMA membership, which is your IMA membership from your Institute of Management Accounts. So just like you have your CA membership, you can take a student membership from IMA even if you're not doing CMA. And once you do that, you get regular magazines delivered to your home about the latest things that happen in FP&A and management accounting. Can we enter into investment banking after this? I would say it will be very difficult because investment banking requires a completely different set of skills, and people usually they prefer people who have that experience in investment banking, or people who are from like who are either CA rankers or who are from IIMs or ISBs. So those are the people they look for in most of the investment banking roles. Unless you have exceptional skills that you can demonstrate in the interview, it will be difficult to transition from FP&A to an investment banking role. All right, so I think it's time up, and I can take one last question if there is any, and then we can wrap up. All right, so if there aren't any questions, Sanchit, I'll hand it back to you. You can let me know if I have missed any question so that I can cover it up now.
Hasif, I think you pretty much covered all the questions asked by the students. I think we can conclude over here. Thank you, Asif, once again for enlightening us on the right way to build career in FP&A. And we really appreciate having this webinar, this area clarified on this FP&A. If anyone has still any doubt, I mean, you can connect with Asif over LinkedIn, and he will surely help you with your doubts. And you can connect with FinThink over LinkedIn. We will be conducting few more sessions, webinars, preferably on weekends. And yes, yeah. Thank you.
Thank you so much, Sanchit. Thank you, everyone. Bye.